Hi and welcome back to my channel. Today we're going to talk about why Walmart might be able to overtake Amazon and what exactly that means for the stock market. We're going to talk about what I purchased in the last week and of course what's going on with the stock market as a whole. As a quick disclaimer, I know I'm pretty behind on these videos, but I have them all filmed. I'm just waiting to edit them. I've been super busy lately, but go ahead and stay tuned for those. We've got a lot to talk about. So as we can see on the day, not very good, down about $75. On the week, up about $173 or 2.62% on the past week. Over the last month, we can see I'm down about 0.2%. Over the last 3 months, up 17% or $987, up $307 in the past year. And all time now, up $491.49 or 7.8% all time. And this past week, I did input another $150 into my Robinhood account. My total investment is now $6,300. With that $150, I purchased $40 worth of Bitcoin, or 0.004 Bitcoin at a price of $92.8734. My new position there is 0.168 Bitcoin, or approximately 16.8% of a single Bitcoin. I purchased one more share of Agilent, a stock that's been very good for me. Of course, the technology sector has performed well. I purchased one share at $89.40. I now have 3 shares of Agilent, and I purchased one more share of AT&T at $30.33. And as always, we'll take a brief pause so I can remind you to like the video, subscribe to the channel, and comment down below what you want to see next. We'll get back to the video. Thanks. Next, we're going to talk about why Walmart has a ton going on and what exactly this means for them. So as we can see, this article from thepointsguy.com is titled "Walmart set to release its Amazon Prime competitor with a new credit card coming too." In challenge with Amazon, Walmart is expected to unveil its own membership shopping service later this month, dubbed Walmart Plus. The superstore retail is going head-to-head with Amazon and its long-standing Prime offering. According to a report from Recode, Walmart was expected to unveil Walmart Plus earlier this year before the pandemic derailed those initial plans. But now the largest retailer in the US by sales revenue is set to make a splash this summer with a $98 per year service. Walmart Plus will include same-day grocery delivery, discounts on fuel purchases, and other yet-to-be-announced perks. As more people shopped at home during the pandemic, Walmart introduced a 2-hour express grocery delivery program in April for customers near select stores. That looks to be expanded even further with Walmart Plus. Bentonville, Arkansas-based retailer is said to also be considering adding video streaming entertainment at some point in the future. That's very interesting to me because if you look at companies like Netflix and Hulu even, or Disney Plus, it's not actually a super high margin industry. So it's very interesting to see what Walmart wants to do there. It says there will be a Walmart Plus credit card. Walmart will reportedly introduce a Walmart Plus branded credit card, but it won't be revealed as soon as Walmart Plus launches. If a Walmart credit card sounds familiar, you're right. There's already the no annual fee Capital One Walmart Rewards card. The biggest perk on that card is 5% unlimited cash back at walmart.com, including grocery pickup and delivery. Amazon has the Prime Visa signature card exclusively for Prime members, so it would make sense for Walmart to go head-to-head in the card space as well. The main benefit of the Amazon Prime Visa signature card is a 5% return on Amazon and Whole Foods purchases. So here we can see Amazon Prime, which costs $119 annually, includes free 2-day shipping on a huge number of items, with some products even available on the same day or next day. There's also free grocery delivery in some cities, Prime Video, and other benefits. It remains to be seen whether Walmart will completely revamp its current credit card or complement it with a new offering for Walmart Plus subscribers, similar to Amazon's model. So here we have the bottom line, what exactly this means. Grocery and other delivery has seen one of the biggest surges in spending in recent months. It's no surprise that Walmart wants to capitalize on that right now and leverage its vast network of brick-and-mortar stores. However, it's got a long way to catch up with the incumbent in the delivery subscription space. Additionally, Amazon has built-in ecosystem with Prime Video, music, Alexa devices, and more. There's still a lot we don't know about the Walmart subscription offering and the subsequent credit card that's still in the works. However, we do know both are coming, with Walmart Plus set to launch later this month and a new Walmart credit card thereafter. We'll be keeping close tabs on it as we see these two shopping giants further duke it out head-to-head. Of course, now we're going to talk about what Walmart's stock has done in reaction to this. As we can see, I now own 2 shares of Walmart. My average cost was $121.86. My total return is now up $13 or 5.6%. So it's up about 3% on the day. But if we zoom out to the week, we can see this large jump up 7.5% over the last month. Up 5.3%. Over the past 3 months, we can see a downward trend. Of course, with the pandemic, a lot of places have struggled. Walmart did not struggle nearly as much as their competitors. over the last year, up 14%, and over the past 5 years, up 80%. I talk about this one a lot. I really think that Walmart's got a good business model. I think that this subscription service could be an awesome benefit for them, particularly because people love Walmart because of the low prices and convenience. So anything they can do to be more convenient in the space is going to help them in the long run. Additionally, 76% buy rating here on Robinhood, and if we look at their earnings, they've been very, very consistent at $1.44 a share in Q9 of 2019, and then hovering up and down a little bit, but really not a large dip at all. Of course, I do like the dividend here. It's not huge, but it did get a 1 share dividend here on June 1st. That paid 54 cents. Walmart pays a quarterly dividend, so that works out to just under 2% a year. So dividend yield is now 1.69%, but I like Walmart for a lot of reasons. Let me know what you think. Of course, this is big news for Walmart, and really having a competitor for Amazon will be very interesting. Amazon's shares are now trading for over $3,000, which I think most people agree is very inflated. And we'll talk about Vivint Solar again. Of course, last week I talked about the fact that Vivint Solar is in the works of being bought out by Sunrun. Of course, this made the stock price explode. Today it was up a marginal amount, looks like 1 cent actually. So my 50 shares returned a whole 50 cents, but the total return here is $433, or up 128%. So over the past week, we can see that massive spike. I believe it was up 38% in a single day. It's kind of hovered around that area and a small dip, but of course not a whole lot of drop there. So up 50% on the last week, 55% on the month, 186% on the 3 months, 97% on the year, and over the past 5 years, only up 42%, of course, because they struggled and it was trading for about $2 down here. So back in 2016, trading for $2 and now over $15 would have been a great purchase back then, but I'm very happy with my average cost of $674. Of course, I've talked about Enphase Energy in the past. I've talked about Sunrun, Tesla Solar, but I'm very happy with my purchase of Vivint Solar. So let me know if I should sell now, if you think the price is going to go down before that buyout goes through, or what you think I should do. Now we'll talk about SPHD, or PowerShares S&P 500 High Dividend Low Volatility ETF. I am down $117 on this one right now. It is the second largest holding in my portfolio. I have 20 shares. Average cost is $37.61. They've been hit extremely hard, but I do like the strong dividend here, and I'm hoping that as the market recovers, it will do a little bit better. I'm thinking about holding my position for now and buying potentially if the market drops again. A lot of people are predicting that as the pandemic gets worse. So as we can see, down 2.5% on the day. Over the past week, down 5%. The past month, down 12%. 3 months, down 2.5%, but we can see large spike upwards, and then it's starting to trail off again. So over the past year, we can see very slow growth, followed by that sharp drop off. So over the past 5 years, I think we're seeing that a little bit more. So up a negligible amount, 0.08 over the past 5 years, but of course, very strong dividend here. I believe it's about 4%. Dividend yield is actually 5.59%. This varies month to month, but it is a monthly dividend. One of my bigger stocks that we didn't talk about last week was Penn National Gaming. I am sitting at 8 shares now with an average cost of $24.64. Of course, baseball is starting up July 23rd. Penn National Gaming, of course, has the subsidiary Barstool Sports and a couple of casinos in Las Vegas, some horse racing tracks, and I believe a casino in Atlantic City. So that's huge news for them, considering that there's been no sports over the past few months and casinos were even closed for a couple months. So up about 5% on the day. On the week, down 4%. On the month, down 3%. Over the past 3 months, up 125%. Of course, I wish I would have bought down here at $13. Over the past year, up 56%. And I always like to point out that here in January, trading for $25. And then, of course, after that Barstool acquisition, it peaked at about $38 in February. Over the past 5 years now, up 65%. Of course, I'm very new to this stock, but I love Barstool Sports. I have a couple videos about them, and I see a few comments saying, I love Dave Portnoy, I love Barstool, and I'm always real happy to hear that. 69% buy rating here, and I did see a clip from CNBC where people were talking about the future of Barstool being extremely bright, and of course, the sports gambling sort of scene is only starting to catch on as sports gambling was nationally legalized a couple years ago. The states are now doing that slowly. So I know Pennsylvania was one of the first to adopt that. New Jersey, Colorado. There are a lot of states where it's not actually legal yet. So it'll be interesting to see how much that market grows over the next 5 to 10 years. Last stock for today is Logitech. I have not done hardly anything with Logitech over the last year, and I think it's a stock that I want to pounce on before that dividend hits. If we go down here, we can see the last dividend was September 20th of 2019. This is a once every year dividend. So we can see I've not purchased any shares in a year, but I think if I can squeeze in as many shares now before that dividend hits in September, that would be great. So the dividend last year was about 48 cents a share, paid $1.45, so not a huge dividend there. Strong earnings, and then Q4 of 2020 looks like performed quite poorly, but a lot of companies are. That being said, Logitech has performed awesome. I'm up 73% on this one all time. Total return is $85. So on the week, up 3% over the past month, 13% over the last 3 months, 52%. Over the last year, 74%, and 360% over the past 5 years. Still a 50% buy rating here. Everything that I've read says that Logitech really has things sorted out. They're in sort of the mid-price range of a lot of these technology goods. And financials-wise, they're in a very good position. So I think I want to purchase more shares of Logitech. And as weekly viewers of this channel know, I always talk about Bitcoin. Total return is now only up $1 or 0.06%. My equity is $1,541 with a cost of $1,540. Average cost is now down to $91.50. Of course, I will be purchasing more Bitcoin this week. I think my goal is approximately 0.25 Bitcoin by the end of the year. And of course, with my target price at the end of next year being $240,000, that equates to roughly $60,000. Of course, that is very, very optimistic, but I think there's a lot of reasons to be optimistic about Bitcoin. Makes up 22.7% of my portfolio. So on the week, not much movement. Over the past month, down 6%. 3 months, up 25%. Over the past year, down 27%. And over the past 5 years, up 3,300%. But as we can see, Bitcoin has been very stagnant here in the past month. A lot of analysts are saying that Bitcoin could be due for a bull run quite soon. So let me know what you think about Bitcoin, if I should invest in other cryptocurrencies, or what you think of cryptocurrencies in general. Thanks for watching till the end of the video, and I'll be back next week.